Hi everyone, today I'm going to be talking about Greggs stock, which was a really demanded video that I do, a Greggs stock video, just to go into depth about the company. So I'm going to do that for you today, guys. As always, if you can smash that like button, that'd be absolutely amazing. And we'll take a look at Greggs. Greggs is a baker's, obviously known for the steak bakes, the very cheap breakfast menu, some great sausage rolls. But Greggs is on the stock market, and the ticker symbol is GRG, and the stock is currently down 30%, so it's on a little bit of a discount. Obviously that's due to the coronavirus and it having to shut its stores down. Now obviously that has affected Greggs because obviously it's not having any sales, but the positive thing is that, judging by what's going on, Greggs should be opening up quite soon. And also because of that, when we look at what else has opened up, like Starbucks and KFC, I think they're not too far away from opening up, and Greggs were going to open up at one point, but because of the demand, they were slightly worried, so they're going to leave it a little bit longer, and they've been doing a few trials in Newcastle, and I expect them to be opening up probably within this month. So from an operation point of view, I think it should be good for Greggs. Sure, the sales might be a little bit lower with people working from home, but even so, I think people will still be willing to have, a lunch break and having a walk to Greggs themselves and still getting something, because they're in a lot of locations. So I don't see sales being too that low after this kind of lockdown. So Greggs, I think, is in a great position to open up on a bit of a discount right now. Now we take a look at the stock on Simply Wall Street. It's currently 37% undervalued. When we look at the EPS and revenue, it does have good EPS and revenue growth going forward, and also on the past performance we can see it actually has some good EPS and revenue growth. So it's a company that has a really good history, and it also looks like it's going to have a good future. When we also look at the past, it also has some very good profit margins, and then profit margins have been increasing, which is also great because obviously more profit margins, that means to more cash on their balance sheet. What are they going to do with that? They're probably going to reinvest it in the company, or as shareholders you would probably get a little bit of a dividend increase as well. So that's all brilliant. We look at the balance sheet. The balance sheet currently has no debt on it, which is great. That was at the end of 2019. I mean, they might have took some debt on during this kind of lockdown, but even so, it probably won't be that low. So pre-lockdown at least, it had a fantastic balance sheet, no debt, and also it had 91 million in cash, which is a fantastic amount to be having in cash. All this time, through this coronavirus lockdown, I've always said, the big thing to look at now is companies that have fantastic balance sheets, and this company is one of those that has a fantastic balance sheet. Before the actual coronavirus, before it cancelled its dividend, it makes sense to cut its dividend because it wasn't operating, but it did have a little bit of dividend as well. So you had the growth, you had a 2% dividend yield, which is fantastic, and also this dividend actually had a low payout, so going forward it was quite an easy dividend to pay out. It was a dividend that could also get increased as well. And with it probably going back to operation soon and having a fantastic balance sheet, it's a dividend that I see Greggs paying back out definitely in the next 6 months again. So as a dividend stock, it should come back soon as well. Now when we go into the insiders trading, the CEO was buying shares, which is a fantastic sign. Roger Whiteside, who by the way is also a fantastic CEO. If you look what he's done to Greggs over I think it's the last 8 years he's been there, he's done a fantastic job with growing them. And with him buying shares with his own money, I think that's a fantastic sign, because that's a sign that if he's inside the company, he thinks the stock cheap, he knows what's going on. He's kind of thinking, I'm going to buy stocks in my own share. I know what's going on. This company's going to go up. So that's also a fantastic sign. I love seeing it when companies do that. Now, when we go into the investors relation report, we can see that I'm going to kind of do a 100-page investors report really here in 3 minutes. But basically, what the company is working on, and this is why the company is going to be able to do great revenue and great profit and increase that dividend. This is why you buy this stock, because of the share price going up, because of them reasons. When you look in the investors relation report, what they're working on is a supply chain, so then Greggs can produce their own food, which will mean that they're able to open more stores in the future. Also, they'll have greater control on the product, and also with that they'll also be able to have keep control of their costs a lot more, and also that means their profit margin will carry on increasing, which has already gone up in previous years as well. It also has a deal now with Just Eat, so you imagine Greggs with delivery what a combination. So just the contract that they have exclusive now, that should really help them out as well. They're also opening up a vegan range, which last year caused a lot of headlines, which is great. I mean, it won quite a few awards, and obviously any sort of publicity is kind of good, and a vegan range also kind of opens it up to a new market. Rather than being that kind of like fatty, unhealthy pastry, having a vegan option kind of, you know, helps that Greggs reputation and opens it into a new industry. And this kind of links in with the, you know, the supply chain. They're going to have more shops. They're looking at more locations to open up. So I think they're going to be looking to increase the amount of shops they have by about 400 over the next few years. So obviously having more shops, that's going to lead to more profit. That's going to lead to more revenue. With that, the share price should go up, and also they should probably increase that dividend. So when we look at Greggs, we can see the plan in place to go forward with the more shops and that supply chain, the Just Eat deal. It looks like this company's in a fantastic place. The balance sheet's really healthy, the growth's really healthy, the CEO, fantastic, and he's also backing up the company with his insider trading. So this is like a 5-star company for me. You get the dividend, you get some growth, the company's going to carry on doing really well. And as well as that, it's a company on a massive discount, but should come back to operating soon as well. So for me, Greggs is a really standout buy right now. And as you know, if you subscribe to my channel, you know that I was buying Greggs shares quite heavy over the last few weeks. I have kind of got to a position size now where I'm quite happy with it, and I don't know if I'll add that much more in now. Maybe I might nibble a bit, but for me, this is a company that I will buy in really heavy, and if it does dip lower, I probably would buy again. But it's a company I definitely rate, and when I look into this company, when I see the growth and the discount it's on, I potentially see this company going up probably 100%. Definitely a 3-figure return over the next 2 to 5 years, maybe even more than that. So for me, Greggs is an absolute buy right now. Still at these prices, I think it's a buy, and I really like this company, and that's why I bought it, and that's why I rate it as a buy. So for you guys that want me to do a Greggs video, I hope you enjoyed it. As always, smash that like button, subscribe if you haven't, and I'll see you in the next one.